going on with the EV market? What's the overview and outlook? Nick, take it away.
All right, thanks a lot. Appreciate the opportunity to be here and share some thoughts. Can folks see my screen? Yeah, okay, cool. So right up front, a lot of this content was kind of dated at this point, given what's happening right now. So I spent a little bit this morning putting a couple of extra slides at the end to share some ideas about what I feel like might be coming next for us, given the current situation. So, so my name's Nick Nigro, Atlas Public Policy. We're based in DC. It's really crazy here right now. Everything is shut down. We have a makeshift childcare center going on in my house right now. We have I live in a 3-family, and all of us have toddlers, and so it's wild. As they say, we live in interesting times. Atlas is started about 5 years ago. I started it about 5 years ago. We work with lots of folks in public policy, NGOs, government agencies, private companies. Our mission is really to bring data and analytical capacity to folks like yourselves. And there's going to see a lot of charts basically in this slide presentation. And it all comes from a product we call EV Hub, which I'll tell you about in a minute. As Diana mentioned, I spent a lot of time in Minnesota a couple of years ago ahead of a proceeding for Xcel Energy, basically presenting on a number of the different topics that they were proposing. So I think I had like 6 trips to Minneapolis that summer, and I really appreciated them hosting it during the summertime as opposed to the winter. So anyway, so our product EV Hub, this is where all the information I'm going to present to you today is the source of that information. It is a website that attempts to aggregate all data and relevant news, research, all kinds of activities in transportation electrification. We make it free for public agencies, going back to our mission about trying to improve access to information for people like yourselves. So if you haven't already signed up for it, I highly recommend you do so after this webinar. So first things first, what is driving the investments in transportation electrification? Putting aside public policy, because I don't think we'd be here without public policy. From a technology and private investment standpoint, it's the decline in the cost of batteries in a nutshell. On the left side, you can see the battery pack cost declines since 2010, where they were over $1,000 per kilowatt hour with a battery pack, and today they're well under $200. This data is the company we get it from, Bloomberg New Energy Finance. We don't have the data for last year yet, but it will be lower. And you probably saw that GM is expecting to, this was an announcement they made a few weeks ago, they're expecting to drive costs down even further. On the right, you can see how those battery pack costs have actually manifested themselves in the marketplace in terms of the price to the consumer on a mile range of electric vehicle. Back in 2011, 2012, it was over $500 per mile of range to get an EV, and now we're well under $200 in a lot of cases. You can see the Bolt itself has dropped in the last couple of years. Basically the same price, more range. And so we're under $150 of range now, and I expect us to go much further in the next 5 years. So what that's done essentially is, as you drive down the costs of range, you increase the possibility or the profitability essentially of different types of vehicles. When we first started working in this space, people like yourselves 10 years ago, everything was about plug-in hybrids because we were trying to be economical. You travel 20 miles on a battery, then you kick over to gas, and we'd at least electrify some amount of miles. That was because we were looking at $1,000 a kilowatt hour. Now that we're looking at $150 a kilowatt hour and below, long-range all-electric vehicles are the way of the future. That is where the investment is going in the auto industry. And it's also broadened the tent for electrification beyond passenger vehicles much more quickly into buses and trucks. And so that driving down of the cost of batteries, what it's done is make it very attractive to put large sums of money on the table for battery electric vehicles. on EV Hub, we track those announcements. So you see a press release, Volkswagen's going to invest so many billions of dollars into EVs, and what we log that data in our database and try to track where the money's coming from and also where we think it's going. And that's that chart you can see on the right. The chart in the EV Hub is actually a dashboard that lets you interact with it, so you can drill down and figure out where these different investments are coming from and going. But in a nutshell, we've tracked over $350 billion of investments. So it's considerable. And this is in transportation electrification broadly. So not just cars, but also trucks, buses, and infrastructure. The problem right now for us as people who work in public policy and who are trying to, and continue to keep the US as a competitive player in this space is we are lagging in overall investment. You can see on the left side where company headquarters have made announced investments, and on the right side where we expect those investments to end up, essentially where the vehicles are going to get built, the infrastructure is going to get deployed, et cetera. The US is only slated to get under 15% or so of that total investment. Though that's up recently, it's still lagging considerably behind China and Germany. Just last year alone, $131 billion was announced. And some of that announcements were kind of teased in previous times, but the companies have basically said, here's more about what we're going to be doing with that money. And so we try to make sure that we track the difference between saying one company is going to invest $50 billion in 2018, and in 2019 they say, here's where some of that $50 billion is going. We make sure not to double count any of those investments. So there's a lot of money on the table. We don't have to get into climate change in this group, I think, but that's what's been driving a lot of the policy that's encouraged this investment. But now that the costs of batteries have come down, it's much more of an attractive space for the private sector to commit to. And that's showing up in the sales as well. So what you're looking at here is the national passenger electric vehicle sales over time in the US on a quarterly basis, all the way through the last quarter. Oh, whoops, sorry, I'm missing the last quarter, it looks like in this chart. But the sales were reasonably high in Q4 of 2019. Importantly, though, what you'll notice is the big blue bars. That's Tesla. We're going to talk more about Tesla in a moment, but they're the real leaders of this market, as you all probably know. Back in the fall of 2018, when they launched the Model 3, all that pent-up demand for the year or so before they announced it was realized in Q3 and Q4. So we saw a huge spike in passenger electric vehicle sales during the second half of 2018, which led to a really record growth and market share. The lines that you're looking at on this chart are the market share for all light duty, which includes trucks and large SUVs, and passenger cars. And you can see that EVs are doing quite well, even putting aside those record sales in late 2018. Even on any quarterly basis, they're getting over 5% market share right now when it comes to passenger cars. So that's a good sign. But when you look at the market overall, which is currently 70% pickup trucks and SUVs, and with $1 a gallon gas, which is what I just saw in Austin, Texas, that's going to make Americans likely more interested in those kind of larger vehicles. The market share is much lower, and that's because there aren't that many EVs being sold across the country today. It's growing, but it's growing slowly. And in fact, sales year over year were down about 9% or so in 2019 compared to 2018 levels. And I mentioned Tesla a moment ago. This is breaking out in a more clear way, I think. What you're looking at are the growth rates of over time, so the year-over-year changes to kind of say where the market is going. And you can see that huge spike in growth in 2018 when the Tesla Model 3 was deployed. So that's the year-over-year sales. The blue is all the market, and the red is all the market minus Tesla. So basically taking Tesla out of the equation, the rest of the market looks like that red line. And what you can see is even when the market was doing its best, there was growth, but not considerable growth in the rest of the market. And that's really where the challenge lies in the near term. In 2019, you can see that several quarters, in fact, all quarters of 2019 were down for all autos on a percentage basis in the aggregate, except for Tesla. And so right now we face what I call a chasm between the first and early second generation technology and the third generation of the technology, when the automakers are really looking to reach scale and frankly, really try to sell the vehicles because there is a profit margin for them. The early vehicles, there's a lot of press about the fact that the OEMs weren't trying to sell those vehicles. That's largely because they weren't making any money on them on a per vehicle basis. So a negative number times a lot is just a bigger negative number. So it was quite logical for them to basically do compliance for electric vehicles in the early days as they learned how to manufacture the vehicles, et cetera. But we're now approaching a period where Volkswagen, hopefully General Motors soon, and some of the other automakers, aside from Tesla, are actually really trying to manufacture these vehicles in mass. And so it's that chasm between, late last year, late 2018 through probably the end of this year into 2021, maybe longer now because of coronavirus, where we have to figure out what's going to happen in the passenger vehicle space, because there are going to be lower sales figures in the near term. Not putting aside coronavirus, there were going to be down sales likely for 2020 as well in the US, because those mass market vehicles are really just not available at this point. On the other hand, when you look at infrastructure, and this is again kind of very closely related to where we are with the coming market, the infrastructure market is growing rapidly. This map shows you all of the fast charging stations across the country. So just the fast charging ports. The red, which really jumps out in your eyes, I'm sure, that's Tesla. They built that market, that infrastructure in advance of launching most of their large mass volume vehicles like the Model 3, and really kind of cut off any concern about range anxiety right at the beginning. So you don't really see a lot of stories about infrastructure challenges with Tesla drivers because they had the infrastructure there. The rest of the market, because they had vehicles that were frankly not that long range or competitive with gasoline vehicles on a extended trip kind of basis, there just wasn't an incentive to build a ton of infrastructure. But that's changed a lot for a couple of reasons. One is investment is clear. Long range all electric vehicles are where the market is going. So there is anticipated demand for fast charging in a lot of places. And two, the Volkswagen settlement. Electrify America, having the subsidiary of Volkswagen, who has to invest $2 billion into infrastructure, a lot of that's going to be fast charging. And you can see the green dots showing up quite visibly already. That's the network that Electrify America is building. And it maps really closely with Tesla for good reason. And so there is going to be that nationwide network for regular passenger electric vehicles that aren't Tesla nationwide over the next couple of years. It's being we can expect that to continue to grow.
Nick, can I ask a question?
Sure.
I don't see a lot of green dots up here in Minnesota. Looks like one in Madison, and maybe like there's
so it's
one
a good question,
right there.
right?
But
so what are they doing, right? In the Electrify America's investment plans are broken up into cycles, four cycles essentially of something like $300 million a cycle. It's a lot of money. And so 350, 400, whatever it is. And so the first cycle was looking at markets where there was considerable amount of EV deployment, sort of the early wins. And so, and also keep in mind, they have to fulfill a consent decree and legal requirements of spending all this money. So we're also looking at places where they could easily deploy infrastructure. And so that's why you can see some of them in not so popular EV spots in different parts of the South. So putting those two factors together, what you're looking at right now is basically cycle one. We're in the middle of cycle two now. And so they're going to be deploying infrastructure in a lot of the other parts of the country. I would expect Minnesota is either already planned or in progress, but I'm not sure. So
Thank you.
hope that helps.
Yep.
Okay. So I mentioned earlier that because of these declining costs in batteries, the tent for electrification is much bigger than where we thought it would be at this point in the market some years ago. And so electric transit buses are growing rapidly. Electric trucks growing far more quickly than I would have expected a few years ago, still in the early phases of deployment. But electric school buses are kind of frankly a surprise as how quickly they're growing in this near term. If you were to ask me which segment of transportation I thought would fully electrify first, tire-based transportation, I would say electric transit buses at this point. There's so much momentum with that technology and support within transit agencies around the country, including goals that you guys have for electrifying transit buses by X date, that I think that we've reached that point of no return for electric transit buses. And the federal government is also sending strong signals through its Federal Transit Administration's Low Emission, No Emission program, which has funded hundreds of millions of dollars worth of electric transit buses and will continue to do so into the future. So because of that declining cost in batteries, on the last chart, you can see the price parity estimates were already kind of there with transit buses in a decent number of circumstances on a total cost of ownership basis. So not upfront costs, but when you factor in all the potential for fuel savings. So if you deploy the infrastructure smartly and you're able to get low cost electricity, you can get total cost of ownership benefits with transit buses today in some cases. School buses are further out. Trucks are even are a little bit closer, but even today there are cases where trucks make sense financially. We actually just put a report out about that. And so the story, even though the passenger electric vehicle story is kind of a mixed bag at this point, I think the medium and heavy duty story is overwhelmingly positive right now, even with coronavirus, as I'll talk about in a moment. So states, congratulations, Minnesota. You've now in this map of states looking into getting into the ZEV program. Adding Minnesota, Colorado, and hopefully New Mexico as well in the near term, and also just recently Washington State passed a law that says they'll be joining too. So this map's even a little bit out of date, even though it's only a couple weeks old. This is a really positive step from my standpoint for for the EV market in the near term. In general, because there's very little action here in Washington. You have very little federal support, I think, for passenger electric vehicles right now in DC, both in Congress and at EPA and US DOT. So it's the states that have to step up and join and push the industry. As I mentioned earlier, a lot of the growth in EVs in the last few years, besides Tesla, was because of public policy, essentially compliance for these programs. So the more programs that we have in place that push the industry into this market, I think the more EVs we can expect in the near term. Another positive development is this settlement with Volkswagen. Minnesota, actually, you have a great plan, mitigation plan for spending funds, and I cite it often as being quite thoughtful on how to look at how to be forward-looking in using your funds, essentially trying to use the funds as an opportunity as a transformational opportunity, as opposed to just kind of filling in budget gaps, which have probably existed in most states for a while for some of these target uses like school buses. Minnesota has a pretty forward-looking plan, but a lot of other states do now too. And in fact, the awards that have gone out have been quite positive for electric vehicles nationwide. Half or a little over half now of the funding awards that have been made have gone to just electric vehicles. A good chunk are still just, like I said, kind of filling budget gaps, replacing old crappy diesel buses with newer, less crappy diesel buses, like in the state of Arizona. And it's understandable why some states are doing that. But I think this is a really rare opportunity to make a down payment on the future And we are encouraging a lot of states to try to spend as many dollars as possible in electric vehicles. And so far, that's what's happening. Some states have put all of their money into electrification, like New Jersey. And many states have at least committed to doing so, like in the state of California, even though they haven't made any awards yet. Similarly, New York. So this is a very positive development. And even if it doesn't result in crazy amounts of charging stations everywhere or school buses, what the settlement is fundamentally doing is building institutional capacity within state agencies around the country to work on electric vehicles, which wouldn't have been there otherwise. And that's a really big deal. We work really closely with the state of Tennessee as an example, and we are helping them develop their programs for spending their Volkswagen dollars on the electric side, of course. And they have resources now to do that work, which wouldn't have happened if they didn't have the settlement. So this is a big deal in a lot of states that don't have necessarily the top line political will from a governor or from a legislature. Other big mega trend in electrification is the role of the electric utility. And Excel and some of the other smaller utilities in Minnesota are good examples of that. We've been tracking the proceedings for investor-owned utilities for the last few years through EV Hub. This chart's a little bit out of date. We're actually up a little bit over $1.4 billion now. But in a nutshell, we have over $1.4 billion approved for utility investments in electric vehicle infrastructure, medium heavy duty truck rebates, and other programs, education and outreach programs to advance in electric vehicles. We also have $1.4 billion on the table. And what's great about this is it's widespread throughout the country. Nearly every segment of the country has some engaged utility trying to push EVs in one way or another. And they're a critical part of the equation right now because in a nutshell, the charging business model, especially in the public, is not really a great business as a charging service provider. It's a really tough business. You have to do a lot with public-private partnerships and value capture of different types of sources of value from the presence of those charging stations. Think buying snacks at a coffee shop or something like that while you charge. That's how you make the business work. So it's a tough business right now, in part because electric vehicles have such low cost energy and people can charge at home. So having the utility there is a great way for the industry to capture the value of electrification to the electricity ratepayer. And that, to me, is actually probably the largest source of value that's being left on the table right now. And what I mean by that is if we can push demand, or if we have a lot of demand from electric vehicles, and if that demand is filling in gaps in the supply of electricity, essentially assets that are currently underutilized, those assets are lower cost usually. And what that does is push the average cost of delivering electricity lower. And so by lowering the average cost of delivering electricity, essentially filling in gaps in demand, we are putting downward pressure on electricity rates. So around the country, utilities are trying to make this case to their commissions that, hey, this is a real opportunity for us to reduce emissions, save consumers money by reducing the cost per mile of transportation services, and also save electricity ratepayers money. Of course, this depends on having smart programs that are deployed by utilities and that consumers' behavior is compatible with that theory. But so far, the data is pointing positively to the results for ratepayers, especially in California, where those programs are generating tens, if not hundreds of millions of dollars of revenue beyond the cost of the program. And essentially, the cost of deploying that infrastructure for passenger vehicles, the consumers are spending a lot more on kilowatt hours than those costs. And so that's generating more revenue for the utility, which then gets dispersed to the consumer rate base in the form of lower rate costs. And so that's a very positive story right now out of California, who's on the bleeding edge of the market. So so long as other states are are deploying their programs intelligently, I think we can expect lots of benefits to the ratepayer in the further engagement of electric utilities. Okay, so takeaways. Electrification, huge investment opportunity for the United States. Currently we're lagging, so we got to really step it up. In my opinion, especially until something changes here in DC, policy at the local level and state level is going to be critical. We have some challenges in the near term for light duty sales. As I mentioned, we're in that chasm between first and second and third generation technology. The infrastructure is focused on fast charging, which is a good thing in anticipation of those long range vehicles. And the utilities are really the linchpin, I think, for successful infrastructure rollout. So I added a couple of slides at the end here just to try to summarize my thoughts on the coronavirus. This is just an overview of what the impacts are, and I'm sure none of this is news to people about how serious the situation is globally. It's particularly serious for transportation, not just air travel, which we read about in the news, but also the purchase of passenger vehicles and medium heavy duty vehicles, frankly, and mass transit demand. You know, if people aren't going to work, they're not taking the train or the bus to work. So this is a serious problem across the economy and across the transportation sector broadly. So I think, and not to be funny with the puns here, but the coronavirus is putting a lot of uncertainty into the near-term EV market. I think the auto industry is currently facing a worse crisis, the worst crisis, I should have said, not worse, since 2009. It might actually be worse than in 2009. It's hard to say at this point. We have factories that aren't able to manufacture vehicles. They're shuttered right now. Tesla has to stop making vehicles. Factories in Germany have to stop. There's no demand in China, which is the largest passenger vehicle market today, and sales in the US are likely cratering as well right now. And so I think it's going to be hard to make the case that autos will continue to make near-term investments in EVs, actually pulling the trigger on those investments. They might be holding back, waiting to see how this plays out. I think the industry could focus on compliance only in the near term to kind of try to bridge that gap. But it's really hard to predict what's going to happen on the other side. It really kind of depends on how things shake out here and how long this lasts. For charging, you know, it's hard to do construction projects right now. It's certainly hard to get them started, but even ones that are started might be paused. It really depends on local regulations. I think that will slow down investment. And from a utility side, you know, they are facing a real shift in demand, you know, less in the industry sector, probably more in residential as people are staying home. So they're focused on keeping the lights on, I think, for now. From a public policy standpoint, I think that depending on how this shakes out, how long it lasts, we could see some programs either delayed or canceled as governments try to reprioritize. I think the best hope for electrification right now is the dedicated funding pots, like the settlement, Volkswagen settlement, carbon fee programs that exist in the Northeast and in California. Those are bright spots that probably won't be reallocated. And finally, I'll end on a positive note. Trucks and buses, I think, are going to continue to be a bright spot. The buses are being deployed largely because of dedicated funding pots, the federal program I mentioned, and the settlement. And trucks are still largely in that demonstration pilot phase, so I don't see any of that changing too much in the near term. Okay, I think I went a couple minutes over, but I'm happy to take some questions and hang on the line for a while.
That's all good. Great. So let's open it up to questions. You can just unmute yourself and hop in. So I'll start with a question. So these are all